Let's go ahead and get started. Welcome everyone to TradeFinder Live. Great to be back with you all during this trading day and during trading hours at our nice holiday weekend. Hope everyone out there enjoyed their holiday with some family and friends, and happy to be back in the markets with you all. So as always, let's kick off with our disclosure disclaimer agreement. The main thing to take away from this is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. This is always available on our website to be read in full detail at your leisure, or feel free to take a screenshot of it now if you like. That's the main point to take away. Other than that, bond yields are a story this morning, it seems, moving higher on the appeals court's tariff ruling, and the ISM Manufacturing Survey showed contraction. So wouldn't that seem to add fuel towards a rate cut? Who knows? But we'll see what's coming up here in this next September meeting and everything around that, all that, and erroneous NVIDIA news on top of it. So lots of topics to get into today, and excited to interact with you all. So without further ado, let's go ahead and get into it. Rob, you out there?
I am Zach. Happy Tuesday to you. Happy Tuesday, everybody. And second, what Zach said, hope everybody enjoyed a nice holiday weekend. And I'd have to say that I hope you enjoyed it half as much as I did, because how about them Knowles? All right, we'll leave it at that. And we'll take a look at what's going on in the markets. As Zach mentioned, plethora, as they say, of news to talk about this morning. Market trying to digest what that appeals court ruling may mean. I kind of feel like the market has this wrong, at least the concerns. The bond market is no doubt reacting in a negative way, with yields moving higher today. You can see that big, I'm just jumping right to the bond market here because that is the story of the morning. There's that drop down in prices on the 20-year. Remember that TLT shows prices on the 20-year, prices and yields move inversely. So prices going down, yields and rates are going up. It's a big jump up. Why? Well, I guess the thought process or the realization over the weekend after that appeals court ruling said that a good percentage of President Trump's tariffs are illegal, that only Congress has the ability to do that. Started making people think, oh, well, the tariff thing has worked pretty well as far as bringing in over $170 billion into the country, into the government. And if the tariffs are illegal, are we going to have to pay that back? And paying that back on top of the already heavy debt load that we have would put a strain on the bond market, because that means that the U.S. would have to issue more bonds and treasuries to pay back that money, and then to continue to finance the debt. So is that accurate? I don't think so, because President Trump is going to appeal that decision to the Supreme Court, and where it was viewed that it was a partisan view by the appeals court, the president, or at least the administration, the party that's in power now, has the majority in the Supreme Court. So I feel like once it goes to the Supreme Court, and this is certainly nothing more than my opinion, everybody can have their own opinion, that it's likely that the Supreme Court will uphold President Trump's ability to enact tariffs. My guess is that with some stipulations on some sort of limitation, as far as some of those big tariff threats to get countries to the bargaining table. That's my opinion, for whatever it's worth. But it is affecting the markets this morning. And then, as Zach also mentioned, the ISM manufacturing report came out this morning, and it depends on how you want to look at it, right? It did show contraction, but not as bad as people thought. So the headline is ISM manufacturing was better than expected, but it's still showing contraction in the economy, and that's not good. Manufacturing is a very good sign of the underlying health of an economy. We also look at the ISM servicing sector, because we are a services-based economy. So a lot of people watch that number. I like to look at the manufacturing though, because I think it gives a bigger picture, albeit a longer term picture of where things are in the economy. So with that showing contraction, seems like that would give the Fed the fuel that they need for that September rate cut. So why is the market reacting so negatively this morning? Um, yeah, hard to know. And then on top of all that, the bond market's action, the ISM report, a report came out on social media, was making the rounds that NVIDIA is reporting supply constraints, and that could hurt their next quarter's revenues. And NVIDIA has come out and said that's not true. That's an erroneous story. It's one of those things that spreads on social media. Somebody puts out a rumor, and then it makes you wonder, were there ulterior motives? Did somebody put that out because they wanted to get into NVIDIA at a lower price? The market used to do it differently. I've talked about this in our Thursday night insiders meetings that we have every Thursday night for our subscribers at evotrader.com. That in the old days, before so much electronic trading, when the floors were full of traders, you had the floor traders going through things, they would start a rumor. You know, one guy, you probably went through this, I did in psychology class in college, where the professor would come and whisper something into the first student's ear, and then the idea was that you tell the next person behind you what you were just told, and then the last person in class says what they were just told, and it's so dramatically different than what the professor had told the first person. That's just how human nature works. Things get exaggerated and expanded upon as we go through. People hear things differently, interpret things differently, and all that kind of stuff. But on the floor, someone would start a rumor. The rumor would spread around the floor. Everybody reacts. Everybody's jumping up and down, making trades, and it was all ulterior motives trying to get um, price to move so that some of the bigger players could actually, get into a position that they wanted to at a better price. The manipulation kind of thing. If you've ever watched the movie Trading Places, with Eddie Murphy and Dan Aykroyd going way back. If you're interested in trading and you've never seen that movie, it's kind of a humorous take on how things work. I would suggest going through and looking at that. But getting back to the SPY, that gives us a rundown of all the stuff the market's trying to digest this morning. We are off the lows, but just barely of the morning. We'll see where things wind up at the end of the day. We did gap down. Friday, we were able to close right on the 10-day moving average. I've drawn this line here where the market is having difficulty just under the 650 level, right at 650, and just ever so slightly below the AI target that has been given for, all the way back till June, that the SPY would likely hit 652. As I said, we're just, as my uncle used to say, a frog's hair away from hitting that level. And oh, by the way, if you're watching this and for some reason you haven't gotten a copy of the software, you can go to hub.com, hubb.com. The software is free. All the Elliott Wave signals are free. There is an opportunity to subscribe to the AI signals if you'd like. It's not a requirement, but if you're looking towards the world of AI in the future of trading, the Hub organization has been actually using that for sending out alerts since 2020. So I think they're way ahead of the game. So something you might want to consider. But I don't like it when the market gaps. You all know that if you've been watching over the past months. So I hate this gap down. If it was just going to roll over and move lower, and this is a area of resistance, no doubt about that. But we have to see where we close today. That's going to be key. And then tomorrow is going to be the most important thing. Do we follow through again to the downside? And if we do, then it seems we are destined for at least a test of the 50-day moving average, which is that royal blue line. And if that doesn't hold, maybe all the way back to test that 610 level, which was the February highs, which we finally took out back here in early July. We haven't, we kind of tested it right there. Some people could say that was a test, and fair enough. We did move down there and close higher. Here on Non-Farm Friday, we made a move down and jumped back up. So is this another one of those where we jump down, buy the dip is the mentality of the new breed of retail trader? Do they do that again? We'll have to wait and see. There's a lot of money in money market accounts. They certainly could. But if we do get a follow through to the downside, once again, let me bring the arrow back. Note how that would be different from what's happened on these past few moves down. So there was a down day, immediately bought into. Down day, immediately bought into. Downward move, immediately bought into. Is this one going to be the same? That's why I'm saying the follow through implications tomorrow are going to be so key. It will be a different modus operandi, if you will, if we get follow through following a dip like this, and it's not viewed as a buying opportunity. It is viewed as things are more concerning. I view it differently, but it doesn't matter how I view it. All it matters is how the market views it. But I look at this as I do think the administration will prevail in the Supreme Court on the tariffs. And I do think the Fed has the PCE report that came out at the end of the week was roughly in line, slightly hotter on the year over year, but it stayed at 2.9, didn't quite hit that scary 3% thing, 3% level. So I think the Fed has the green light to cut in September, but also have been thinking up till today, and I have to look at this to see if it changes my thesis. I thought getting by that PCE report that it didn't come in too hot to squelch any sort of a potential for a September rate cut, that the market would likely continue to drift higher into the meeting. And once we got the rate cut in September, especially if it's only 25 basis points, which is what I'm expecting, we could have a buy the rumor, sell the news event at that point. And that's where we might see a little bit more of a corrective move. We are in the first trading day of September, and everybody knows the history of September being one of the worst performing months. And if you're curious as to why that is, what normally happens over the summertime is the market trades on lower volume and therefore lower volatility. If we go to the VIX, we haven't had quite as low a volatility as we did last summer. I've noted this a number of times that last summer we hovered around the 12.5 level. That's where we were in the summer last year. This year, slightly elevated on the VIX. We hovered around the 15 level, and we've kind of stayed there. Still lower. Now you can see the line of lower highs on the VIX, a little bit of a descending triangle there. Remember, that does not necessarily mean a downside breakout. We could break higher on the VIX along those lines, but that's what happens in the summer. The volatility tends to dry up a bit. A lot of traders are gone. They're away for the summer. And normally what happens is the market drifts higher. There's an old expression, and I like citing old expressions. I'm an old dog. I've been doing this for over 28 years. And when I cite these, quote, old expressions, my viewpoint is old expressions exist because they work. And some of the old school traders take a look at those kind of things. And the expression is never short a dull market. And so normally in the summertime, you have less volatility. The market tends to drift higher. A lot of traders are gone. They're taking their summer vacations, et cetera. Now the kids are back at school. We're back to basically all the traders are back. All the institutions are back in the markets. And what will often happen in September is the market has some give back. And this is where you can argue some manipulation or whatever. It almost seems like in September we retrace a good part of the rally that occurred over the summer because those big institutions want to get participation in the gains that were made over the summer when they may not have been trading, may not have been involved in the markets. And so anyway, that's a little bit of backstory. I'm getting off on tangents here, but sometimes I think that people like the old stories and some of the rationale behind it and why things exist. So that's another reason why I'm really interested to see what happens tomorrow. Do we get follow through here? So I'm not buying the fact that the concern in the bond market is so geared towards the tariff thing. That's the rhetoric that's being put out on the financial media. Again, my expectation is the administration will prevail in the Supreme Court, and it'll be non-event what happened at the appeals court. And I do think the Fed is going to cut 25 basis points in September. So once again, why are we moving down? I think it's the explanation that I just went through. The big traders are back. They're trying to push the market down so that they can get in and participate in some of these gains that were made from earlier in the summer. Look where we were back in June. And we have had a pretty good melt up since then. And I think the institutions want to push the market down a little bit and try to get in at a lower price to where they can participate. Whether or not that thesis is true will be told by whether or not we get follow through tomorrow, or if this is just another one of the normal blips down and the buy the dip mentality is still there and we turn and rally tomorrow. So those are the things to watch for. So I've covered the VIX. I've already covered TLT. We will look at TNX because I know a lot of you that view things. We did not do a U.S. market update over the weekend due to the holiday weekend and travel constraints from not just myself, but others. So let's get caught up in what's going on in the bond market. And you'll see a little bit higher move on TNX, but not much, right? So you can see the shorter curve is not being affected as much as the longer end of the curve. See that move slightly higher there on the TNX. So this is the 10-year, and this does show rates. So TNX shows rates on the 10-year, where TLT shows prices on the 20-year. That's where we closed on Friday. So we're a little bit higher, but not significantly so on the 10-year. But then when we go back to TLT, it was a pretty good move down. On the 20-year, I view that as being healthy because that means that the yield curve is steepening again, which is how it's supposed to work. You're supposed to make less interest when you hold a bond or treasury for a shorter term than if you hold it for a longer term. And when you have an inverted yield curve, that means it's the exact opposite, which tells you things are askew. It's not normal. You shouldn't get as much of an interest rate for holding a bond or security 2 to 10 years versus holding 20 to 30 years. You're supposed to be rewarded for committing to holding a bond or treasury for a longer period of time. So when the yield curve is inverted, that's why all the concern, that's why you hear about that all the time, is it kind of upsets the apple cart, so to speak. So let's go take a look at the dollar, which I think is really important. And the dollar is kind of going through a little bit of ho-hum. We'll see an update on this at the end of the day, but we're not getting a massive spike in the dollar, which you might have thought with bond yields a little bit higher, but not too much. And then if we go and take a look at our other markets, we look at the Dow, you're going to see similar picture, not quite the same gap down, a little bit of a gap down on the Dow, but right now we're holding the 450 level. At least we held that on the low. So this is a no harm, no foul movement so far. But once again, what happens tomorrow? Is there follow through tomorrow? Does the Dow break below, or the DIA at least break below that 450 level, and we get follow through? Well, that would mean we're probably headed all the way back down here towards the point of this triangle breakout and the 50-day moving average. And as you can see from that line, they're pretty darn close together. So if we get follow through tomorrow, I think all the markets are likely going to test their 50-day moving averages, which again, from a longer term technical standpoint is no big deal. Trending patterns often test the 50-day moving average. You can see just on the Dow here, tested it back here in June, tested it in early August. Maybe we're due to test it again in September. None of that would be a negative or a big concern as far as a significant correction. It would just be the normal course of business in a market trending higher. If we take a look at the Qs, we look there and same thing, you would expect this movement down. Now, the interesting thing here is look at the Qs, they're already testing the 50-day moving average on the low today. So once again, does this dip get bought into tomorrow? If we break that 50-day moving average on the cues, we're highly likely coming down to this next area, which is not a strong area of support. It just happens to be the highs from February on the cues. That's what that line means. So we'll watch for that tomorrow. So the story that I'm making here today is the importance of not only where we close today, but specifically what happens tomorrow. Do we get follow through to the downside tomorrow? And I think that changes the narrative of buy the dip. And again, goes back to the story of, oh, the big boys are back and they're going to push the market a little bit lower before they come in and buy. The big boys have always thought they had more power than the retail trader and that they can overpower the retail trader. I've talked numerous times over the past months this year how we are in a slightly different environment right now than we normally are, in that we've had a whole new crop of retail traders come in, not just since COVID and the meme and social media and all that. And the retail trader has buying power. There is a lot of money in money market accounts. And if the retail side of things decides to put that money to work, they can probably match some of the buying power of the institutions and create a little bit of a push and pull, yin and yang, if you will, which would be kind of fascinating to watch. It's not normally that way. Normally, the institutions take advantage of the retail side and oftentimes take advantage of them. So can the retail trader fight back? Will they fight back? They have the power to. There's that much money in money markets, but will they put it to work? That's going to be the answer as far as whether or not it plays out that way. We'll take a look at the IWM. Little bit of a give back here, but look where the IWM is, only at the 10-day moving average. So really odd that the small caps are performing better. You would expect a downward move today with yields going up. We've talked about this numerous times. I don't want to spend a whole dissertation here because I've already had a few soapbox speeches this morning, but the IWM is the most sensitive to rates, and that's because it's small cap. The smaller companies don't have the war chest like an NVIDIA or an Apple or whatever, where they have tons of money sitting in accounts that's very liquid that they can employ to invest in their businesses. Smaller companies need to go borrow the money to invest and grow their businesses. So they're susceptible to where rates are because it determines, one, how much it's going to cost them to borrow money, and two, they have to weigh out, is it worth it to borrow money at these rates, or do we want to wait and see if rates go lower? That's why the IWM is so sensitive. But the fact that it's not having a worse day on a day that rates are ticking up, I think is quite interesting and may lend a little bit of a lean. Again, we won't know till tomorrow, but a lean towards, again, the buy the dip mentality. If you want to know where the action is today, here it is, gold. Look at that move. We've had this big triangle for a very long time. We've talked about this. At some point in time, GLD was going to break out. Gold was going to break out. There were a lot of reasons for it to break to the upside. Little surprised that it's breaking higher here when the dollar isn't moving down due to interest rates. The dollar is kind of acting pretty stable. And so that the dollar potentially moving higher on these rate cuts was on a non-rate cut. I'm going to be clarify on that. The GLD would have broken down if there was a non-rate cut. So that ISM report may be outweighing all this tariff stuff and what's going on in the bond market. It's kind of odd to see GLD bucking the trend there. But gold at least is looking for, we're going to get a rate cut. We're going to see the dollar likely move a little bit lower on lower rates. And it's making a big move in that direction. So I've drawn these lines. You've seen them for a couple weeks of the expected moves out of GLD. If it were to break to the upside, which it is now confirming, I think around 330 would be a level that might bump its head. And these levels are just drawn from the mouth of the triangle. As a reminder, when you look at triangles and I'm pretty good at triangles. That's how I made my claim to fame in the world of options trading. That's what I was known for. And you measure the mouth of the triangle and then take that from the point of the triangle, and that gives you potential targets either to the upside or the downside. And you always, always, no matter what's going on, respect the fact that a triangle could break either direction. Well, it's broken to the upside, so we'll look somewhere around that 330 level to see. Once again, I'm going to bring the arrow back. Sorry about that. Close it off a little too soon. I wish it wasn't the gap up. So we're going a little bit vertical. We gapped up. We could go one more day and actually hit the target. And I would feel very confident in that 330 level if we had just broken out and run. The gap and the vertical gap, we could get a little bit of pullback over the next couple of days, or we may go hit it tomorrow. Kind of an unknown there. So once again, I wish you wouldn't have done that, but the market's going to do what the market's going to do. They couldn't care less what I wish things would happen. And there's the follow through on silver as well, breaking out in its 5-wave pattern, had a little bit of a triangle here. The triangle was formed at a very logical spot. The AI had identified this level here around 33, going all the way back to the very beginning of June. We traded there for about a month and a half, broke up, came back, tested that level, formed the wave 4 right at the 38.2% fib level and the 50-day moving average, and then we consolidated into a triangle and then the upward breakout as silver is following gold there. As we move to the energy space, taking a look there, you can see that here we have a little bit of a tick up in UNG. I did send out an alert for our traders at evotrader.com from the speculative portfolio because it doesn't follow any of the specific rules that we have for our 3 primary portfolios in the level 3. So the speculative is the 4th portfolio. I've just felt like the supply demand curve is in favor of supply. That's why prices have been going down. But at some point in time, the sellers are going to get exhausted. And we should have a little bit of a move back. The wave 5 went down more than 100%. So you don't follow the Elliott Wave rule of when a wave 5 ends, you go back to the 4. That rule's out the window when the wave 5 goes over 100%. You look for a kickback up to one of the fib levels, fib retracement levels. And so I've drawn a line here that I felt like maybe we could see a test of 15. And we've already had all the things. We know the data centers are going to be using it. We know the administration is against solar and wind power. We also know the electrical grid will not hold all the power that the data centers need. So where are they going to go? Natural gas. So that's a big demand aspect. We're also moving out of the summer towards the winter months. And will we have a cold winter? Who knows? But those things have been known for a while. And so that hasn't put a bid under natural gas. So my thesis on this has just been, and from a purely technical standpoint, and this is where people get confused on the markets because they say, it doesn't make any sense. We have all this supply and we've had these reasons for natural gas to go higher and yet it hasn't. So it's going to go lower. Well, maybe it does go lower, but my thesis has been at some point in time, the sellers get exhausted. Now, if we do get a bounce, maybe the sellers come back in and push it back down again because we don't know exactly how strong the demand side is going to be. We don't know how much natural gas the data centers are going to use. We don't know how cold the winter is going to be. But it's just a purely technical thing that I'm looking for here. I'm not looking for any sort of a significant rally in natural gas or any sort of a unusual big move to the upside. I'm simply looking for an oversold bounce here on the fact that at some point in time, and I might be right on the timing or I might be wrong, but I am going to be right that at some point we will get a reflex bounce once the sellers become exhausted. So the only question is, am I right on the timing or do we have to go lower before that happens? That's the only question. But I do know that that thesis will be right at some point in time. So once again, is it now or later? Who knows? We are getting a bid on oil. today, breaking a little bit above the 75 level. And that's no big deal. We're still staying in this big range that I talked about at the beginning of the year and the market outlook that I felt USO would stay here. It's pretty clear. OPEC Plus likes the level around 75. It's a heightened level of oil, but it's not so high that it's going to push people into electric vehicles. You've heard my thesis on this numerous times. And, this is just a one-day bounce. Now, I would submit that if we run back up here, because the last two times it looked like USO might break out, OPEC increased production. So they pushed oil back down here. They pushed oil back down here. I don't think this is enough that they're going to worry about that, but they're desperately trying to manage the supply-demand curve in oil because they're aware if the price of oil gets too high, a lot of people are going to throw in the towel on combustion engines and they're going to run to electric vehicles. And they don't want that because then that could really push oil lower. So they're trying to manage the supply-demand curve, and that's what's going on in USO. Let's go ahead and take a look at the crypto space, which Bitcoin has been down quite a bit here over the past 2 weeks. It's trying desperately to hold 60. Now look what's happened. We broke below it, and now we're back up testing it and the 50-day moving average. So even though Bitcoin is having an up day, doesn't mean anything today. It's got to get back above, at least based on the BITB, which is how we look at Bitcoin. I've mentioned this, and people have commented on the U.S. market updates. Why are you showing an ETF? Why not just buy partial coins? Why do you need to buy an ETF to participate in Bitcoin? And my response has been, I'm an options trader. I like the leverage involved in options. And BITB, IBIT, which some of you prefer, both have extremely liquid options. So you get better leverage by trading options on one of the ETFs than you would by even buying a partial coin. The difference is the time value factor, right? So options do expire at some point in time. Well, just go out a little bit further in time to offset that part of it and maintain the leverage. But just from a purely technical standpoint, the bounce today doesn't mean anything. It's got to get back above 60. It's got to get back above the 50-day moving average. You can see the 10 and 50-day moving averages are in the exact same spot, which coincides with the highs from May. But if we can break through that and then get some follow through over the next couple of days, maybe we're off for another run on Bitcoin. And you could argue that, well, if all this tariff stuff, what if the administration does lose? What if I'm wrong and they lose the Supreme Court ruling and we have to start paying back all of that tariff money that's come in, and then we start issuing a whole bunch more bonds and treasuries to pay for that money, because I'm quite sure it's already been spent, and on managing the debt. That's certainly going to affect the dollar to a negative side of things, and perhaps that gives the crypto space another bid. So lots of things to watch, lots of things to analyze. Ethereum, as evidenced by the ETHW, is maintaining its stair-step pattern here. Stair steps work till they don't. So you go up vertically, you consolidate, you go up vertically, you consolidate, you go up vertically, you consolidate. Ethereum has been outperforming Bitcoin. It's having an up day today. Well, it was, and now it's down a little bit, but maintaining pretty well, I would argue, with this sideways consolidation. Does it take off again? Does it make another run higher? Or is that the end of the stair-step pattern? We'll see, but it's setting up to where it could make another run if it wants to. But the next couple of days are critical in the crypto space. As far as where things are going to go over the short to intermediate term, that's not affecting the long-term thesis in the crypto space by any way, shape, or form. I'm just talking about short to intermediate term along those lines. All right, with that, Zach, we'll go ahead and open it up to Q&A before we get to today's case study consideration.
Sounds like a plan. Let's get right into it, Rob. Got a question here from Jim. What is your take on ANET, still on wave 3?
Let's take a look. Arista Networks, yeah, it's holding in there. And Pretty well. Everybody knows, unless you're new. And if you're new, um, for everyone that watches numerous times, they hear me repeat the same things over and over again. I do that for two reasons. One, if I'm repeating something, it's because I want it to be ingrained in your brain as a rule to consider in your own trading. Obviously, you have to make your own decisions, but these are things that are my trading rules, and I feel like they're worthy of everybody taking into account and considering in their own trading. And the second reason is because we add new people all the time, and we always have new people that haven't heard these rules in ad nauseum, like a lot of you that are consistent viewers week in and week out. So I didn't like the gap up, but you could argue that we've consolidated this relatively well. When you have a gap up like that and you get separated from the 10-day moving average, one of I say two, but the third one is a combination of the first two is going to happen. Either the stock comes back down to the 10-day moving average, it consolidates, goes sideways, and allows the 10-day moving average to catch up, or a combination of the two, which is what's occurred here. We did have a slight pullback, but we've also consolidated nicely and allowed the 10-day moving average to catch up. And the rule, if you're wondering, well, what's the rule, is no security in any time frame gets too far from the 10-day moving average for long. That most people that have been following me for quite some time have said that one rule has helped their trading more than anything else. And if you just look at charts, you'll find that's just a solid rule that always works. And it doesn't matter whether you're too far from the 10-day moving average on the upside or the downside, the rule still works. So as far as ANET, back to the question, if you're long this, there's absolutely no reason to get out. There is no technical breakdown at all. The question was, is it still in a wave three? And the answer to that is yes. The most important thing is the algorithm. As a reminder, this Hub software programmed the algorithm. It aggravates me when people in the U.S. market updates say, I don't agree with where you've labeled the Elliott Wave. And I just want to be clear, they are not my labels. I don't label the Elliott Wave. The algorithm does within the software, and it's programmed based on the algorithm that Ralph Nelson Elliott wrote over 100 years ago. That's what draws these, not me. And the algorithm is showing that wave three is still active, which means that it's not sure that it's over with. In other words, there's a possibility we could make a new high. When that three turns purple, which tells you that the wave is over, that's when you'd be looking for more of a wave four pullback. So it's still in a wave three. If you're long, there's zero reason to get out. Keep an eye on it along with the rest of the market. But you're in a good one there, and I see no reason to exit that in any way, shape, or form.
Thanks, Rob. Manuel would like to look at INTC.
Oh, good old Intel. Yeah, they went through a heck of a turn where President Trump was calling for the CEO's resignation, and then they met, and he realized, oh, okay. Well, in fairness, the concern was because the head of Intel is Asian, and they were worried about whether or not he was sharing secrets with China. That's where the concern was, not his actual performance. And so they met, and the conversation obviously made President Trump feel that they weren't sharing. They were keeping their trade secrets secret from the Chinese, and so everything was okay. And you got this big rally. So here was when the rhetoric was negative against the CEO and the company, and then everything's okay, and we get the big rally. But all we did was go test these highs, which is what we talked about when we looked at this before, that it was likely we would run up and test these highs in February and then in March, and it is a point of resistance. So we hit that point of resistance, we backed down. Now this is going to bring in a rule. It's one of the reasons that I like doing these events. Y'all have heard that I love doing TradeFinder because you guys are a great community and you ask amazing questions and you come up with stocks that aren't just the ones that are talked about, the 7 stocks day in and day out on the financial media. And it's fun for me to go through and analyze not the same old ones. every time. But the rule at my mentor, and I'm just trying to share some of my experience with you. That's the only motivation of doing this. Um, and it doesn't mean I'm God's gift to trading by any way, shape, or form, but I have a lot of experience and I have some things that I can share, and I hope it helps you. I was a financial advisor. I was a registered securities principal, and the institutional side of trading doesn't care about you. They care about their bottom line. And I didn't like that. And that's why I left that world and just started trading and been doing that for 28 years. So trading on my own because they told me I couldn't trade options. And I said, okay, I won't trade options for clients. No, you can't trade options on your own either. And I said, goodbye. That was the end of it. So one of the things my mentor told me is the third time's the charm. In other words, when you test a resistance level for the third time, whatever happens from that is what's going to happen over the intermediate term from there. So we have had a bit of a drop down here. We are at the 10-day moving average. So if you're long or want to be long Intel, you need it to very quickly get above this resistance line. On the positive, the wave 3 is still active. So the algorithm's not sure the wave 3 is over yet. But based on that rule that my mentor told me, we need to get back above that level. And if we can break that level now rather quickly, then Intel could take off and extend that wave 3. It's down with everything else today, so I wouldn't put too much weight in this. But again, tomorrow, but you need to see that rally rather quickly. And if it doesn't, be careful of this level here around 22 and a half. That's the next level of support, coincides with the 50-day moving average. Again, maybe all the markets are just coming down to test their 50-day moving averages over the next couple of days, and that's all this is. But for Intel to go much higher, it's got to get up here and break that level, or we're probably destined to come down here and hover around that 22 and a half level.
Thanks, Rob. Next up, we have a lot of chatter around BMNR. Sorry, BNMR.
Yeah, it's been a favorite lately. BNMR.
That's correct. Yeah. Bravo Nano Micro Rover. Looking into that now. Sorry.
Yeah, let's make sure those symbols are correct. I'll refresh here and try.
It's an OTC.
Oh, well, it won't be on here then. Yeah. We only show, or the software only shows exchange traded events. I know it's a favorite of the meme crowd. I've talked about it a lot. Unfortunately, it can't analyze it here. So sorry about that.
Yeah,
We're
my
not,
apologies.
yeah, we focus, we're Elliott Wave options, so we focus on optionable things a lot. And OTC it doesn't have options on them. They got to get onto the exchanges. So sorry about that.
Right, and looking here for our next question.
Lose your place.
No, it's just been a lot of interesting chatter going on in the chat of just intellectual conversations amongst our viewers or subscribers. But question-wise, there's not one that's sticking out other than.
Are we sure that symbol is BNMR? Because that doesn't even show up on my account platform.
As to what I'm reading, it says it is.
It must be a really low dollar stock in the OTC market because even my account platform doesn't have it. So, all right, on to the next one.
Sorry, just 1 second. If you want to maybe give a review on the precious metals, again, we've had some more chatter around just SLV and GLD. Just checking into.
Yeah, go through it again. The only, gold broke out to the upside.
Rob, sorry, I apologize for interrupting you. I found it. It's BMNR.
All right, that's what I thought. Okay. Yeah, because I thought we looked at that before. So this is BitMine, and um, you come down here on the move lower. It just recently went public. Now the problem with this, and I would want to know. Let me look it up real quick. Uh, what I'm looking at here and trying to find out is. Um, when a company goes public, they find a company to actually do all the work of taking them public, and they're known as the underwriter. They're a financial institution. They're an underwriter. So the underwriter gets together with the firm, and they come with an agreed upon price of where they think the market will bear. And that's the price that the company gets, regardless of where it starts trading. Now, if it trades higher than what their agreed upon price was, then the underwriter gets that extra money. And that's where if they grossly underpriced it, then the underwriter makes a killing, and the company had a lot of money left on the table. And if it's the opposite, then the underwriter takes the risk. In other words, if they agree upon a price and it's not well subscribed to when it comes public, and the price actually goes below that, the underwriter takes that risk. The company still gets what the agreed upon price was. Um, um, and you can see that there's risk, and underwriters, oh, wow. All right, so the agreed upon price was $8. So, yeah, if I was uh, the company, I'd be really pissed, um, because look where it opened and traded. So grossly undervalued there. The problem here is it's so far away from that $8. How far down do we go before we find a little bit of footing? So it's catching a falling knife right now. And if that's why it's really important. And for those of you that our meme followers and all this. Hopefully, y'all move to the social media aspect of this platform, because I think it's way better than what else is out there. Zach will talk about that in a few minutes here, but it's important to look at that. What was the agreed upon price? And it gives you an idea of how exaggerated the actual IPO price was, where it actually priced in the market. So if they had agreed upon $8 and it comes out and it trades above 70 on opening day, that's miles away from where the underwriter and the company felt was, the value, at least at that point, in the company. And so it's so overvalued. The likelihood is it's not going to hold that level, and it's going to come back down. So that gives you an idea when an IPO comes out. Is it going to come out and take off, or is it going to retrace first? And that's why it's retracing right now. And there's no way to know how far down this is going to come, but just know that it was grossly overpriced by the market when it came out. I don't think it goes down to $8, because obviously for it to at least come public up here, so it would have been about $65 based on that bar. There's a lot more interest than the underwriter and the company themselves thought there might be. Where are new buyers going to step in? So you've got some buyers that had privy to that $8 price, and you can understand if they got the IPO price or the agreed upon price at $8 and it comes public at 65, they're going to sell. They're going to take that gain immediately. Unfortunately, usually because of a lockup period, it's not the principals of the company aren't able to do that. They have to hold and wait for a period of time. That's usually part of the underwriting agreement. But some people are taking profits right now immediately. And At what point do they say, all right, we're just going to hold the rest now and see what happens? I would think we're probably getting there because we opened at 65, traded as high as like 72. Now we're coming back down towards 40. So you've retraced, and maybe you just use a typical 50% retracement. So maybe we have to go a little bit lower first. If you were able to see this at 35, I think that would be a great price to get in. It might not get there. It might not go down quite that far. I'm just using general rules that big moves oftentimes get a 50% correction. It very difficult to buy this right now. Again, the old expression of you're catching a falling knife here. You're trying to guess where the bottom will be. The way more conservative view is wait until you get an up day followed by another up day. So you get two up days in a row. That's the follow through or confirmation day. Then you get in. But for now, it could find footing at any spot. I'm just throwing 35 out there because it's about a 50% correction from the highs when it came public. So anyway, we got a chance to talk a lot about trading rules there, but time's ticking. So let's get back to the Q&A. Sorry about that.
No, no worries. We do have a few more questions out there for you, but I know we have to get to the case study consideration, so I'll pass a couple through. Just tell me when you want to head over to the case study consideration. So let's go with BABA, BABA.
Yeah, we've looked at that. I know one of our long-term subscribers, Maria, had asked about that, and we talked about anything China related has caught a bid. And I wonder what's going to happen with that now because Russia is not cooperating with what the administration had hoped as far as ending the war, and they reached out, and there's a big Chinese delegation in Russia right now meeting with President Putin. So is that going to sour the U.S. Kind of happier, more positive relationships from a trade standpoint with the U.S.? How upset is that going to make the administration? So we are getting a follow through from the gap up, but I'd be a little concerned about this right now, just based on those aspects of it. We are breaking 130. And if we broke 130, I thought we'd probably go to 140. We're getting awfully close to that. And those were the highs from February and March. And I'd really be concerned about all of a sudden that goodwill bid that's been in all the China stocks being reversed because of what's going on between China and Russia right now. I got a feeling we're going to hear some negative things from the administration here pretty soon. So we are well above the 10-day moving average. We're getting a bit overbought. I can't tell you what to do. I don't give individual investment advice. I'm not licensed to do so, and I don't. But if it was me, I would be tightening my stops rather tight and be willing to take some gains from these past 2 days with all the things that I've cited going on. So, all right, a couple more real quick, and then we'll get to the.
All right, let's do Palantir, PLTR, and then follow that with NEO.
Okay. Yeah, NEO takes us back into the China thing, so that story is going to be kind of the same. Palantir, it's an interesting case. The market loves it. It's way, way overvalued. Good company, but very overvalued from the metrics on average valuations, et cetera. And those fundamentals are just guidelines. They're not hard, fast rules. They can't be. They just, what are average multiples, and they average it out, and they determine is a company overvalued or undervalued based on the average of metrics. I look at the technicals, and we had a 161.8% extension in the zigzag, which happens a lot. It was a 61.8% B wave correction. So Palantir followed zigzag, Elliott Wave zigzag rules to a T. Here, look at this. The first stop when you have a 61.8% B wave correction is 100% extension. It's exactly where it went, and it traded there for a week, and then it took off. and it got above the 161.8% extension, which is an extended C wave. Oftentimes, the C wave will go to the next C level, not next extension level, fib level, I was trying to say. I'm trying to talk fast here. Not always, but oftentimes you'll see that. And then it becomes quite a bit over bought, and that's what happened. They got vertical, went above that level. What goes vertically up oftentimes comes vertically back down. But we are hovering nicely for the last couple of trading weeks here, right around the 50-day moving average. So the key to watch here is this 150 level. If you're looking to step into Palantir, as long as we can stay above 150, you could take a shot. You could even take a shot now just to see if we buy the dip tomorrow. Or if you're more conservative, let it get back above the 10-day moving average first. And once it gets back above the 10-day moving average, then you step in. So you have a little more patience if you're conservative. When the scenario sets up, I oftentimes, because we all have different risk tolerances. Some of us are naturally more aggressive. Some of us are naturally more conservative. So you have to trade within your own risk tolerance levels and comfort levels. Otherwise, trading will drive you into the funny farm. So Palantir, at least from a technical standpoint right now, is acting positively. A whole different scenario if it breaks 150. If it breaks 150, highly likely we're coming down here to 130 and where that B wave was. So this is a key level. So you can take it from there on your own viewpoints.
All right, Neo, and then let's head over to the case study consideration.
Okay. And everything that I just said about Baba is going to apply here. Neo got a big bid because they released a new car that was less expensive, and it was very well received, and so it took off. And as you know, based on what Tesla has been fighting, et cetera, and even in the chip space with NVIDIA and all, China has embarked on this nationalistic approach that they want their citizens buying China-based products. Very similar to what we're doing in the U.S. is we want things manufactured here. So big move up based on the success of the new vehicle launch. We tested the 10-day moving average on the low. We've held that rather well. So from a purely technical standpoint, I would expect Neo to probably go sideways here for the next few days. But I do have concerns now over this contingent from China in Russia, how the administration here in the U.S. is going to react to that, and if we're going to start getting negative signals on tariffs again. Maybe the administration has to wait until the Supreme Court rules. I'm not sure. I know that the appeals court ruling said the current tariffs could stay in place for now, but I don't know if it said the administration could enact new tariffs. I need to go back and read that ruling a little more completely, but that's my only concern on NEO is what's going on between the U.S. and China right now. All right, so taking a look at where we are for our case study consideration for this week. Oftentimes we'll take a look at the signals, and I think with a weakening economy, this one makes a lot of sense. We usually look at stocks that have a reading of 75 or above, but you can see this nice uptrend that URI has been moving. It's United Rental, and with the economy weakening a bit, you've seen some more positive numbers from Walmart. The only one really not participating is Costco, but maybe it plays catch up. And some of the other discounted retailers doing well. And if we take a look at the DMI, you can see that the ADX is moving up. We're getting a little bit of a pause today, but I do think that we see United Rentals go a little higher. I'm not going to go up to the AI's target of 1,074 for one. The percentage is below 75, but we're in the tractor beam here that I talk about a lot. And it's hard for me to imagine the stock's going to come up to 950. It held the 10-day moving average on the low, and it's not going to run up and hit that round number of 1,000. I think that's very likely to happen. Again, as always, I could be wrong, but that's going to be what we're looking at today. So we're borrowing one of the AI signals from the hub software and modifying it just a bit due to the fact that 71% is still pretty darn high. I think most people would trade because the viewpoint is that if you're right 60% of the time, you're way above the majority of traders. So if you get a signal at 71, still 29% chance it's wrong, but 71% is good enough. And adding in the added aspect of that big round number at 1,000, that's going to be it, Zach. So if you want to show them how to put that in, give them an idea of the trading platform. Let's get social media moving over here because it's a wonderful group that we have on social media.
Absolutely. I couldn't agree with you more. We will get that transitioned over on the screen. And is this going to be an official idea, or will this be a post for today's?
No, it'll be an official idea because it's an AI signal, just with a little asterisk that it's slightly lower than what we prefer, but still an official idea.
Sounds like a plan. Alrighty, so I have the screen showing now. I'll take yours down here, and we should be at the platform. So this is a menu view, a jumping off point of everything that this platform has to offer. It's ever growing in both our community and in the features aspects. So very excited for all of the rollouts still yet ahead. But for today's session, we're going to want to post an idea, and that can be achieved by locating this light bulb over here on the right side and the right-hand toolbox. And after that, we are redirected to a page of all the existing ideas to come up here to create a new idea or create a post, which I'll give the difference of that real quick. An idea like we're doing this week is an official idea, which could be equated to paper trading, as if you were doing it with your brokerage. You're going to have all of the real-time data, everything, all of the prices, and all the quotes that would normally be there as if you were having real capital at risk. But and as we know in paper trading, it's no actual capital or risk on the line to lose. Whereas a post is a bit more of a discussion around the idea, not officially ready or feeling like the criteria is fully met or fulfilled to be an official idea, but you are liking, maybe watching one, having it on your watch list for that criteria to be met, and then making it an idea. So for this week, we are going to do it on URI. We'll go on the symbol search window here to find that one. And remind me on the target price there, Rob.
1,000.
1,000. All right. So as we can see, that shows that we're bullish, going to buy long. And what's the interval of time?
And we'll just stay with the 3 months that's already up there.
3 months. So as we can see, we have these fixed intervals of time to select. However, you can go to custom and select down to the very day that you would like your idea to expire, just as if it was an option contract, again, with real capital at risk. Due to time, we are going to go ahead and just get this posted so you can come in and interact, vote on it, whether you agree or disagree. We'll make it nice and pretty here with more details right after this session concludes. But as you can see, it's officially posted along with all of the other ideas. One last note I'll leave there is to just be kind and considerate of everyone else in the community that's posting their ideas and interacting with one another. Whether you agree or disagree, we welcome your opinion. Just obviously have supporting evidence around that, excuse me, around that, and just being constructive as to why you may agree or disagree. If everyone agreed in the markets, there'd be no trades, no transactions to take advantage of. There always has to be a buyer and a seller. So again, even if you disagree, you're more than welcome to add that vote. As you can see here, if I were to click in, you can click this disagree button and share why, or if you agree, you can also share why as well if you'd like to. So we encourage anyone to vote in as they due to their preference, and look forward to seeing continuing growing subscriber base for this platform. So pass back over to you, Rob, and thank you everyone for taking your time to attend today.
Hey, your voice is cracking there. Well,
Yeah, I don't know what's going on. I guess
you're
late
growing
bloomer,
up. You growing up? Yeah.
real late bloomer over here.
All right. So I will take the screen back. We'll finish up by showing that I have added the um, target price on here at 1,000, as Zach mentioned. So that's our case study consideration. I just wanted to further what Zach said is that we always welcome opposing opinions. Just keep your opinion respectful. That we all have disagreements, and I think that's one of the great things about the social media aspect on the Hub software is everybody is very respectful, and we all understand we're all going to be wrong at times, and it's helpful. It's a learning thing to read and listen to what other people have to say because somebody might come up with something that you haven't thought of. So the learning aspect of doing this, posting your thoughts and ideas and listening to what a large group of people have to say about it is a great way to learn. So with that, thanks everybody for your attention during this trading day. We'll see where we close at the end of the day today. And then as I've mentioned numerous times from the beginning, more importantly, what kind of follow through do we get tomorrow, if any, or does the dip get bought in?